In this video, traders, let's look at what is trading psychology. Stay tuned. Hey traders, warm welcome to you. Thanks so much for joining me. All right, so what is trading psychology? Such a big buzzword, and often as traders, kind of our journey is, hey, I need a strategy, I need to find out what's effective, how can I make money in the markets, and then actually, as you progress in your trading, you start to realize that it's a lot about the mindset and the psychology of how you think about trading. So, trading psychology really, I think, is defined as the study of how the mind behaves in the trading environment. And this is why it's so important for trading growth and improvement, is because your mind is controlling what you're actually doing, right? You're clicking the button, your mind is saying, hey, click the button now, make the trade now, close the trade now, think of it this way, that way. So it's absolutely essential. It is the tool we have. We have two tools in trading, our mind and our capital. Both need to be protected. Both need to be used to the greatest effect we can, and we need to preserve them and grow them and all this other stuff. So what are these three things that we tend to split trading psychology up into? Number one is your emotions. So how you feel about trading impacts your behavior and how you interact with the trading environment. So if you're feeling greedy, for example, you're probably going to hold the trade longer, you're going to take a bigger position size. If you're feeling frustrated, maybe you'll, out of just pure frustration, take trades that aren't really the right type of trades. All these little things, and you can be sad about your trading and maybe you not want to take risk, you get nervous. So all this stuff, how you feel in your emotional state, has a consequence to your trading. And so even if you think it doesn't, it absolutely does, because we are hardwired to adjust how we behave based on our emotion, right? And most times, everyday life, okay, human beings have ups and downs and go through life kind of sometimes feeling happy, sometimes feeling a little bit sad, sometimes, that's the human experience, right? But in trading, it's so much more magnified and the amplitude is so much greater because we have money on the line. And for many of us as well, it's such a kind of important goal for us to hit that these emotions are magnified. When we're not doing as well as we want, we get extra frustrated. You're like, hey, I really want to make trading work. I really want to do this, I really want to do that. And it just magnifies the emotion. So, trading psychology, one of the key pillars, if you like, is really to understand that emotion plays a big part. And I mean, I've gone into multiple hours of videos and chatting and podcasts and stuff talking about how this can be tweaked and adjusted and how we improve this and this type of stuff. But it really is one of the main pillars of trading psychology. Okay, so the next pillar is behavior. So how do we behave in the markets as a result of how we think about the markets, how we think about ourselves and how we rationalize our decisions? And things like chasing a trade, for example, that is going to be something as a result of how we think in the mind. And it's normally going to be like, I'm frightened of missing out on this move, I need to get in at whatever cost, I'm going to buy, rather than a rational kind of base emotion of, hey, this is probably going higher. Where's the best way to express this trade with the least amount of risk possible and the most amount of potential reward? And thinking of it and looking at it through that lens, as opposed to, I've got to get in, got to get in. Again, it's a mindset thing, it's an emotional thing, it's a trading psychology thing. Nervous trading, scared of risk. I don't want to lose money. I've been losing money at the moment. I need to, or trade small, and trading not to lose. Talk about trading not to lose. Massively before, how bad and detrimental it is for your trading. If you're going in focusing not to lose, you will almost certainly lose. Not sticking to the plan. Again, this is obviously it's a really complicated one and something that goes in massive depth, but the broad overview of this is that you have an idea, you come in, you're very prepared, you got everything planned out, and the plan goes out the window in the heat of the moment. And that's a normal thing. I think it was Mike Tyson that said everyone's got a plan until they get punched in the face, right? Same with trading, you've got a great plan, and as soon as things are moving, trade goes against you, market's oscillating around, and you see all this action, your plan goes out the window, and you end up trading just from the shooting from the hip, seat of your pants type trading, which never ever ends well. There's some intuition, of course, has to be built into the trading decision, but most of the time you want to be structured and planned out your trading day, especially if you are a day trader. And so then the consequences, the third pillar is the consequences that come from having these out of alignment, if you like. So if you're kind of trading emotionally, it's going to affect your behavior. And then you've got this third pillar, which is the consequences, which is pretty standard really, no or slow growth, drawdown, and worst case scenario, you're trading on tilt. So, if you think about how this flows through and why it's so important to think of the mind and how the mind's behaving in the trading environment, your emotional state. If your emotional state is out of kilter in any way, the negative impact and magnification of that just gets bigger and bigger as you move down the pillars. So, when you're starting to think, hey, I'm frustrated, maybe you're frustrated and you see the market moving and go, I don't want to miss another trade, I've got to jump on this, I've got to get this, and you chase that market with some size that perhaps you shouldn't do as a consequence of the frustration. And what happens is you move to the final consequence, which is you get hit, you get a drawdown, you take a hit, and then maybe that turns into trading on tilt, which is just like this mad trading purely from an emotional perspective, just trying to make money. So think about how your emotions dictate your behavior, which then magnify into unintended and unwanted consequences. That's really trading psychology, guys, the study of how the mind behaves in the trading environment. The mind creates these emotions, how you think about things, your biases, your interpretation of the chart, your interpretation of yourself, how you perceive yourself as a trader. Massive, massive topic. And if you're going to dig in deeper into this, I would suggest that you kind of find a little area in trading psychology and focus on that exclusively and go deep into that. So let's say you are someone who gets ultra frustrated, or you can also reverse engineer and go, hey, I'm not sticking to my rules. What does that indicate from an emotional perspective, and how can I change that? How can I adjust my biases? How can I adjust how I interpret the market? All this type of stuff. And so, big word, encompasses a lot of things, but super important trading psychology. Take care. See you next one. Keep your risk managed. Bye bye.